Bloomberg Audio Studios. Podcasts, radio, news. You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Let's go right to Susan Spence. She's the chair of ISM Manufacturing. Susan, talk to us about this. ISM Manufacturing came out at 48.5. The consensus was 49.5. Tell us what's going on.
Good morning. Thank you for having me on. Unfortunately, we have another month of contraction, about 0.2% lower than last month. So 48.5, we are absolutely under consensus. What we're seeing and what our panelists are telling us, of course, is a continued issue with uncertainty in the market driven by tariffs. So this month, if I can talk about demand, outputs, and inputs, demand, which is new orders, customer inventory, backlog, and new export orders. 3 of those 4 indicators continue to contract. Backlog and new orders contracted a bit slower this month at a slower rate. New export orders, not surprisingly, took another plunge and an accelerated reduction at 3 percentage points lower. So in our view, the lack of new orders driven by that uncertain demand from the marketplace, demand the conflicts of who's going to pay for the tariff costs. The customer index for inventories does remain low. We always consider that positive. At some point, customers have to reorder, and so we're hoping to see that, but that continues to contract. So in our survey, 86% of the general comments from our panelists were about the tariffs. It was 82% last month. It just continues to grow. It's not gotten any better, and certainty is even worse.
Susan, do you get the sense that if some of the tariff headwinds were removed, things get better quickly, or is this sort of permanent confusion in the manufacturing sector?
It's not permanent, but it's not quick. So we think if tomorrow everything was settled, and of course it won't be, we think we're in this for at least the summer, it's going to take some time. We already have some inventory at the higher prices. Customers, again, as indicated by the survey results, are hesitating to order. And so that has driven down production. Backlog is down, and I'll talk about production and employment as well. So we're in it for a bit. The best thing that could happen is certainty. And then my personal belief is it's still going to take a few months for folks to not wait for the other shoe to drop, if you will.
Susan, thank you so much for giving us a couple minutes of your time. Susan Spence, chair for ISM Manufacturing PMI, the Institute for Supply Management, joining us here. Weaker than expected manufacturing numbers coming out this month.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
The last time we saw Sam Fazeli, who's the director of research and does some of the healthcare stuff for Bloomberg Intelligence, he was here in New York, and he was on his way to Chicago to some conference where a lot of these healthcare folks get together and they talk about new drugs and new therapies. And he said, watch out, there's going to be some deals coming out of that. Boy, was he right. Sanofi buying immunology biotech Blueprint for $9.1 billion. Bristol to pay BioNTech up to $11 billion for a cancer deal. Moderna is getting some new news, so we got to get Sam here. He's still in Chicago. He's at our Chicago office there. Sam, thanks so much for joining us here. We've had some deals today in the healthcare space. Help us think about this Sanofi deal here. $9.1 billion. That seems pretty substantial.
Yeah, well, it's more than I have in the back of my sofa, if you like, and the little change that you find there. But the sector needs these. I mean, we've had a drought of deals since Johnson & Johnson did intracellular therapeutics. And then we've got this deal now, and the sectors, as I'm sure you've talked about, and we've talked about, has been under pressure because of all the new issues that are being created for them with the current administration, and that really slowed down deal making. So it's nice to see this deal happen. Not the biggest premium in the world, $27 billion, but still it's nice to see some of these deals happen. And I think assuming we don't get another round of tariffs for pharma drugs and most favored nation conversations turning up, it might be the beginning of a little renaissance in deal making.
What was the absolute coolest thing that you learned over the weekend? I mean, I was floored yesterday. I was sitting and thinking of you and reading like all these amazing articles coming out about these amazing new drugs that could have tremendous effect on cancer, for example. What was the coolest thing you heard?
Yeah, so Alex, there's been some continued evolution and increase in opportunities in breast cancer. So AstraZeneca had 2 presentations yesterday at what they call plenary sessions, and that's one of the key areas where, I mean, the room gets packed with 10,000 people or whatever the number is. And so they had an update on a breast cancer drug, which is continuing to further expand the options that patients, when it gets approved, if it gets approved, patients have in treating that disease, which has become something that a lot of people, as long as they're lucky and don't get the worst kind of it, can live with for quite a long time now. And then we had one also from them on gastric disease, gastroesophageal junction disease, which is not one of the, it's a bad one, and there's not been many therapies there. So that was a really good, very good data set, I have to say, practice changing. And there's a whole host of phase 1, phase 2 early stage drugs that look really good. So I'm going to be coming to this conference for I don't know how many more years, because it's going to keep developing.
Bristol paying BioNTech up to $11.1 billion for a cancer deal. What's going on there?
Yeah, up to is the operative word here. The actual guaranteed cash is about $3.5 billion. So about $1.5 billion right up front. And then when the deal closes, and then by 2028, another $2 billion that's not contingent on any, they're just anniversary payments. So that's pretty good, given that they acquired the asset amongst a whole host of other stuff from a Chinese biotech company acquisition, Biotheus, only a few months ago. And it's in a new class of drugs that people have got excited about. There's Merck that did a deal. There's Summit and Akeso. Pfizer just did a deal last week, paying $1.2 billion for a drug in development, which we quite like the data for that was presented here. So these are drugs that are trying to push the barrier of what we've been able to achieve with what's called immunotherapy. Can you do better? Can you push more patients to survive longer using these drugs?
What about oh wow, I just lost my train of thought. Oh, it was there. It was so brilliant, and then it went away. Oh, I know.
Moderna.
Funding. Here's my brilliant point. Government funding for universities that have big medical units. Like, what were people saying about that?
Yeah, they're not happy. I've talked to a lot of people here, and even my interestingly, an Uber driver that I had who doubles up. She works in a lab that does genomic analysis for scientists at Northwestern University here in Chicago. She said she's noticing a palpable slowdown in the requests she's getting to do analysis of laboratory analyses because people are uncertain. It's even got to my Uber driver, which is sad. No, it is a problem. People are worried, and we'll have to see whether philanthropists can fill the gap.
Sam, so from your conference there in Chicago, is the key focus still cancer, or is there other parts of healthcare that are getting as much, I guess, attention?
Yeah, but so this is a cancer conference. Okay. This is the biggest cancer conference in the world. People come from, and I have to say there's a palpable increase in the number of presentations by Chinese scientists and companies. Yeah, every year it's got more and more, which is expected. They've been funding research significantly for the past 15, 20 years, and this is the fruits of it. The next conference that's coming up is also, I don't think it's in Chicago, but it's over here somewhere in the US, is the American Diabetes. That's where you get all the obesity, liver disease kind of data that we're also looking forward to.
All right, Sam, thanks so much for joining us. As always, Sam Fazeli, Director of Research for Global Industries and Senior Pharmaceuticals Analyst for Bloomberg Intelligence. He's based in London, but he's in our Chicago bureau today because he spent the weekend at as he was just mentioning, a cancer conference, and where a lot of the latest science is presented. So, and for investors, it's really important to think about how which things, which I guess therapies and drugs you want to finance and support. I mean,
does Sam not have the coolest job? Like, media is really cool. We all love it. Energy is really cool. We all love it. But like his stuff, like changes the world.
It does. And he actually understands the science and can explain it to people like us.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
At Alix Steele and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. As John was just reporting, S&P at 5,900. I mean, after all the ups and downs this year, pretty much year to date, we're unched on the S&P 500. It feels like a lot of effort for not a lot of payoff there. Shana Sissel joins us, President and CEO of Banríon Capital Management from Chicago. Shana, how do you put 2025 year to date into context for your clients? Because, boy, we were down 20%. Now we've retraced most of that from the recent highs. How do you position the 2025?
Well, I went into 2025 thinking it was going to be volatile, and it lived up to my expectations. So we positioned portfolios for volatility and did quite well as a result. Ultimately, what's come down to is as more and more information gets out, we have this 24-hour news cycle, and people get information in real time. The markets are able to respond to news quickly. But more importantly, we've seen that the retail advisor has been eager to jump into the market when it turns downward, which is unusual. That's not normally the case. Yep. It's typically the institutions, and we've seen that kind of reversed, where the institutions are holding off while the retail investors are jumping in. And ultimately, that's kept the markets from getting too far down, and they're able to rebound pretty quickly. Basically, if you look in the past, normally we look for the capitulation of the retail advisor, and we just haven't seen that. So for those reasons, that's why I think there's been such great volatility.
But on the flip side, you have to wonder then who else is left to buy the rally. So how are funds positioned? Institutional investors, clearly retail has been buying the dip. So as you mentioned, there may not be an extension of that.
Yeah, but the institutional investors have sat on the sidelines, and quite frankly, they have the bigger money to put to work and more likely to move the market when they jump back in. They're still very much on the sidelines. So I think there is some opportunity to drive the market higher. It's just not how we normally would expect it to be. It's also a little bit concerning. Obviously, the institutional investor tends to be the more informed investor. So the fact that they have stayed on the sidelines can mean a lot of things, but it's not for lack of information on their end and lack of analysis. But we talk about analysis paralysis all the time. There's a lot of uncertainty related to tariffs, related to the administration, related to monetary policy. And I think that in many ways, the institutional investor is a little paralyzed by the uncertainty and for those reasons, unwilling to jump into the market, which I think might be to their peril.
Shana, I know you do a lot of work with alternative investments when you speak to independent advisors. How are they using alternatives these days when the volatility both in the equity markets and the bond markets are pretty pronounced?
Well, that's exactly where they use alternatives. If advisors or individuals were to jump and allocate 20% of their total portfolio to alternatives, they would have actually done quite well through the volatility, as these are low to no correlation, or even in some cases negative correlation assets. And so if you look at the most volatile parts of the last 5 months, you look at March, some of April, some of February, you'll see that like a BTAL, which is the AGF anti-beta market neutral fund, that fund largely outperformed the S&P by a substantial amount, was very positive during that period of time. So even a small 5% allocation made a huge difference in client portfolios. And then you start to pair that with other low to no correlation assets like CTA and CBLS and MRSK. And then you have Bob Elliott's Unlimited Multi-Strat Fund. And you have a number of these alternative funds that all did really well through the volatility. So when equities and fixed income were down, they were up. And so that actually helped you through the volatility. So advisors that we work with that implemented those portfolios actually rode out that period of time quite well.
I know that where you look at in the tech market isn't necessarily broad strokes or, buy AI or buy the telecoms or whatever. But the Mag 7 have really helped to lead that rally over the last month. Does that continue, or do you continue to see value in different types of names?
Well, obviously, I see value in different types of names as they haven't participated and they are looking more attractive on a valuation basis. But the tailwinds really do sit with those tech companies because the biggest tailwind to business right now is AI. And so anything related to AI, anything incorporating AI wins. And so we saw with the Mag 7, with the most recent NVIDIA earnings report, that the demand for AI is strong. And the move from learning and to the next phase of AI is there. And so the Blackwell chips, the greater need for computing power, all of those things are real and very much in their infancy, and the sense of that there's no infrastructure there. And so there continues to be substantial tailwinds, and so that's why they continue to lead. Other areas of the market have headwinds. So if you look at, say, energy, we have increased supply coming on, but we have, declining demand from Asia. So that is great if you want oil at $40 a barrel, but not great if you're an oil investor or an energy investor. You look at healthcare, and we've seen a lot of headwinds there, but also some tremendous breakthroughs, and especially in oncology. So, there's pros and cons to everything, but some of the cyclicals are starting to look cheap, and that's definitely a place that I would be looking.
All right, Shana, really appreciate it. Always good to get your perspective. Shana Sissel is president and CEO of Banríon Capital Management.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts, or watch us live on YouTube.
This is Bloomberg Intelligence. Alix here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We cover everything you need to know in business, economics, and finance, a lot of media, and also a lot of energy. So I don't know that much about fusion power. I'm the first one to say it. John Tucker apparently knows a lot about it, but we're going to discuss this right now. It could be a really good source of clean fuel. And for this, we bring in TAE Technologies CEO Michl Binderbauer. The company TAE Technologies just closed $150 million in its latest funding round. The whole point of this company is to develop a commercial fusion power. Michl, if I knew nothing about fusion, which is highly likely, tell me what it is, how hard it is to do.
Yeah, so it's basically what nature does best, right? It gives us our life and energy here on the planet from the sun. So any star you look up is a fusion reactor, basically, right? So what we're trying to do is to replicate that terrestrially to make essentially copious power, carbon-free, clean, and sustainable for the future of humanity.
Where are you in the process at TAE?
So we're very close. We're just one machine away to get to a point where we actually harvest more energy than what we're putting into the facility. This has been obviously a long journey. It's hard to do terrestrially. The stars have a lot of gravity. We don't have that. We have to use other means, magnets and all sorts of things. And as you've probably seen over the last few years, there's been a plethora of news inching really, really close to the goal line across multiple efforts on the planet. So we're about a 3-year away to get to net energy, and somewhere early 2030s, we hopefully have a power plant online.
What would be, if you were able to achieve it and have a power plant, like, what is that? Is that just tremendous amount of energy with like no footprint?
Yeah, it's very small footprint. So it's the highest energy density fuel you can have, about a factor of 5 to 10 higher than fission even. It utilizes hydrogen or light species that are ubiquitous. So there's infinite fuel supply, if you will. And you would harvest clean energy out of that at probably starting at a scale of a gas-fired turbine. So something like 400 or 500 megawatts per plant. And it would literally be able to distribute wherever you needed it in the grid.
Can you talk about the economics surrounding this technology? Who would be the users, the buyers, the developers of this technology?
Yeah, so I think what we're seeing, and this gets to what we just announced today, aside from raising capital, we really have a long partnership with Google.
Okay.
And they've been deep with us on machine learning and tools to help make this more efficient and more economic. And in fact, they would be a great first off-taker for that, right? All the hyperscalers, everybody that has high energy intense applications growing at tremendous rates, right? With a gap between supply and demand developing, is looking for electrons, and particularly green electrons. So those would be probably the first off-takers for this technology.
Oh, I got to ask.
Oh,
yes.
What sets you
this
apart?
This is John Tucker. He likes his fusion.
What sets you apart from ITAR in terms of the reactor itself, the containment? That's a tokamak fusion reactor or what?
Yeah, so hey, good question. So ITER and others are working on tokamaks. We actually are not. We're working what you see, if you have a visual. And we have a compact machine about the size of a gas turbine that can make about the same output as those other plants. It's much more efficient, uses smaller magnets. There's various tricks in the physics that allow you to do that. And that brings something that's more compact, cheaper to produce, of course, more economic to deploy, easier to maintain, et cetera. And you can essentially centralize these. We think we can build those sort of cookie cutter in the factory and deploy on site. And the other thing I should add is that siting on this, compared to the other nuclear cousin, which is fission, right, is a lot easier. There's no meltdown possibility. There's no sort of nuclear accident of substance that people would have to worry about. It's truly clean and benign. And so you can deploy it where you need it in a much more straightforward way.
And there's no use of beryllium in that reactor?
No. In fact, ours is using hydrogen and boron, both of which are light and super ubiquitous.
Well, deuterium as the fuel, right?
So deuterium and tritium is one fuel cycle. That's used by some of us in the fusion community, and we can burn that too, but we're really focused on hydrogen and boron ultimately. That turns out that only makes helium. So you have no neutrons, you have no radioactivity to speak of. It is just the nirvana of energy, essentially. You get ubiquitous fueling, no radioactivity or pollution in the process, totally sustainable. And we think it will be competitive from a cost perspective. It'll be probably starting out midfield in current generation asset costs. So you're not as cheap as gas or renewables, but you're not as expensive as fission is today, is somewhere in the midfield, and then trending down.
Okay, let's pretend that neither of us understood what any of you guys were talking about in terms of beryllium. That's why we have him, right? He knows a lot about a lot of different things. Before we let you go, just how hard is it to have gotten to where you are? Like, what has been like the biggest hurdle?
Oh gosh, it's been an enormous journey. I mean, I've aged. I started this out of high school. I almost said I started out of graduate school with my brilliant PhD mentor, and then it took us about 20 plus years to amalgamate the technology around it. There's a lot of esoteric, absolutely extreme things you got to master: power supplies, accelerator technology, diagnostics, feedback loops. Use a lot of machine learning and AI, a lot of that we developed together with Google in the last decade, that can react on the blink of an eye to make changes in what happens inside and do that reliably and consistently. And so those are all the technologies we now have. So now we're putting in the last machine. So it's been a long journey and developing lots of technology to do that.
All right, Michl, thank you so much for joining us. Michl Binderbauer, CEO of TAE Technologies. Joining us there with some exciting new technology on the energy front that John Tucker's all into, which is very fascinating.
That was like insanely impressive.
The questions were like
yeah, but nobody understood him.
No,
so
but it was good. We love it.
Like,
we love it.
Make
you can
it
explain
all
me
up.
in the commercial break. That's true.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.